See, in my book, yesterday was like a nothing sort of a session, very quiet. You were not here, not there. Uh, the small cap index did not see a relative damage. You were up from the day's low, off from the day's high. Nothing too much, nothing exceptionally can really be read into yesterday's market action. If we are in for more days like what we saw, let's say on Friday, again on Monday, I think that is good news. That means markets are telling you that they are in a mood to consolidate, which means that the pace of selling should be reducing, and the margin in the technical compulsions which were there in the system, those technical pressures in a sense are getting weeded out. The messaging from the market, I think, is very simple, that good large cap stocks are likely to trade with a positive bias. Small and mid cap stocks are finally finding their feet. If we don't see anything going wrong globally or locally, I guess the margin selling what we have seen, that in a sense could be reduced. I see the following factor which is at play, which is that you need to be cognizant of what is happening in the world of commodity. This market is unlikely to go up in a hurry. In this market, at least in small and mid cap stocks, bulk of the correction I think is over. So large cap stocks, positive bias. Small and mid cap stocks, the fall may just get arrested. That does not mean they'll start rising. But in terms of individual themes, I think it is going to be manufacturing, it's going to be capital goods, and things which are related to the election theme.
All right, that could possibly be the way forward in terms of the theme, as well as maybe a stop in the fall when it comes to the broader markets. The other big talking point then is the promoter stake sale, and in particular then you've got Tata Sons in the spotlight, which they've offered to sell about 2.3 crore shares of TCS, and this is via block deals in order to raise close to $1.1 billion. This is as per Bloomberg reports. And Nikunj, you have the Tata Group stocks that have been in focus after there has been talk about that listing by Tata Sons by September 2025. And then, of course, we can discuss the promoter stake sales across different companies.
See, TCS has been doing a big buyback. And despite that big buyback, the fact that Tata Sons in this case is looking at monetizing their stake in Tata, in TCS, now there could be two implications for that. One, do the Tatas need fresh cash in order to expand their new age businesses, and especially the chip manufacturing business? And was the stake, because if you are looking at selling stake in TCS and then raising capital for your chip business, that means that this was always part of the plan, or this is something which in a sense has been done to ensure that Tata Sons becomes technically debt free and they will have to avoid listing. Now RBI said that with the current structure they will have to go public. Tata Sons clearly would do whatever it takes kind of an approach to avoid the listing of Tata Sons. So I think this move, to me it appears, is more in the direction where they are looking at raising cash before the financial year closes, reducing the debt, and then ensuring that Tata Sons does not fall into that RBI definition of the framework. Well, they will have to go for a compulsory listing. The implications of this in the near term would be that, again, we have seen a deep swell in some of the Tata companies which have ownership in Tata Sons. Those stocks, they went up, they corrected, and now the outside chance of Tata Sons going public, I think, gets diminished, which means companies like Tata Chemicals, Indian Hotels, Tata Motors, stocks which saw run up on this whole news flow that Tata Sons could go public, I think those stocks really could take a back seat. Now the second part, and which is the more interesting part for me, promoters. What is happening? Just add up the numbers. Yeah. Tata Sons BAT 17,000 crore, TCS 9,000 crore. You're looking at Indigo 6,000 crore.
Whirlpool, Sawmill, AB Sunlight.
That's what 40,000 crores bought.
Yeah. A lot of supply.
40,000 crore of good quality large cap paper, whatever may be the compulsion, whatever may be the underlying factor, but nobody saw this kind of an sizable paper or fresh paper coming to the market. And we are talking about promoters here. And this, in a sense, is always the locked up stock, which never comes into the market. So 40,000 crore of promoter paper or promoter holding comes to the market now. And that there is there is limited and finite amount of liquidity which always will be there in the market. So one side we are saying flows are strong, yes, flows are strong, but when such good quality paper comes to the market, the appetite by institutional investors to gobble it up is always very large. So I see this in a sense will have an impact in terms of how the near-term liquidity would be defined and how the near-term liquidity would be redefined. Let's discuss ITC. You have two large buyers. Tata Sons, TCS, we don't know the bias, but I'm using ITC. You had ICICI Prudential and you had Capital and you had Temasek. Now, they have an India allocation. ICICI Prudential has allocation which comes into companies. That if ITC block deal would have not been there, would have gone into some other company. It would have gone into open market transactions. So that flow, which in a sense would have gone to some other stocks if the promoter deals would have not happened, has actually gone into these deals where they bought they have got enough quantity without having impact on the price. So this, in my book, will have an impact on liquidity, additional promoter stake, and the pool of the money, which is finite, will actually suck it out.
Yeah, absolutely. Well, on one hand, back home, of course, it's all the promoter stake sales which are hogging all the limelight. But look what's happening in the commodity universe. We were just looking at dollar, which is up about almost, for 3 consecutive sessions. Look at what's happening to Brent crude. It's already at a 4-month high. And be it commodities like cocoa, rubber, nickel, more importantly, commodities like copper, which has seen an uptake of about almost 7% in the last 1 odd month. Seems like inflation is going to bob its head once again pretty soon.
Chocolate prices have gone higher. Coffee prices have gone higher. And for me...
Copper as well.
Copper, well, I mean, for me, the first thing is that my chocolate prices and my coffee prices will go higher. So that's how life
copper,
changes.
Given that it's an indicator of global demand, when copper begins to move, traditionally, it also indicates a strong bull market ahead.
Yeah, you call it Dr. Copper, an indicator of what is happening to the demand. But of late, that historical correlation has got challenged. Last couple of years, a lot of historical correlations have got challenged, which is that, okay, there is going to be weakness in the dollar index and strength in commodity. That script has not really played out in totality. But commodity is coming back up. And especially if you look at, cocoa is not that relevant. It really could be a cyclicality. It could be the crop at play. I don't understand. I don't track cocoa that much. But crude and copper, if they both come back, are we reaching that zone where inflation at a global level will start becoming uncomfortable again? The ghost of inflation has not haunted us in the last 6 months. I'm not saying that ghost is going to come back. But the ghost of inflation is something which is off it is not on the radar for everybody. If the surge continues, and given that we've got an FOMC meeting later this week, could the surge in commodity prices have an impact on the way how the inflation reading for FY24 will move? I don't think markets are prepared for that, but if anything changes, this is something which you need to be watchful of. 4.3 is not the most comfortable print for the 10-year paper. 103 is not the most comfortable print for the dollar index, and 86 is definitely not the print which will make anybody happy. So now let's see what happens to crude ahead of election. Will there be a price hike? Will there be a price cut? All that hullabaloo will start again.
Okay, and let's find out how exactly you should be approaching the markets in light of what we've been seeing. Lots of large deals. We've spoken about how that's going to impact the liquidity situation. Select small caps as well bottoming out. And Nikunj, what about those who've been waiting on the sidelines at a time like this when we've seen the broader market snap that gaining streak? What's the outlook in terms of entering the markets?
See, if this liquidity barrage would have not come from promoters, or the promoter stake sale would have not come out, I would have made a case that large cap stocks will outperform meaningfully. Now 40,000 crore, 40,000 crore getting just sucked out in a matter of less than 1 month will surely have an impact on liquidity. As it is, flows from foreign institutional investors have not been extraordinary strong in 2024. So that will have an impact on liquidity. I think we are in nothing sort of a market where you simply want to buy low. Sliver of the market is giving you options where you can actually trade and you can chase the momentum. In any good market, you will have stocks to buy. Any bad market, you'll have stocks to buy. Any good market, you'll have stocks to sell. So I think we are going through that phase of the market where you got to resist your temptation to trade and resist your temptation to buy. It is a market where rather than preempting the move, let the market prompt the move. Sometimes don't try and prejudge the market, let the market prompt what it wants to do. It could happen this week, it could happen next week, it may well happen, middle of April. I think we are in that phase of the market where if you're just lying low, I think that could be a great strategy.
If you like this video, then like, share and subscribe to ET Now.